Hi, this is Zach Mee from Zach's Traders Cafe with a look at the major markets on Friday, the 20th of May. Starting off with the FTSE 100, and it was seen that, like other markets in the indices area, we closed yesterday right on the support area. 60.36 was the level we were looking at as support for this market. That was the last low in March, and effectively so far that has held, but only an end of day close back below it would really get us into bear mode here. So that explains why the market has been marked up pre-open today so far. If you're looking though for a proper proper indication on the upside, it would be led by an end of day close above the 50-day moving average at 61.99. So something to watch out for as the week ends. Onto the DAX, and here again we've bounced off the support area. Yesterday's close just around the 97.95 zone. Initial low for May 97.37. So while there's no end of day close back below that, we would be looking to for the range to hold and as a potential buying opportunity. But what you can see here from the RSI trace is that we've had three kinks in this trace here over the last couple of weeks, and that really is normally a leading indicator on downside rather than anything else. RSI also below 50 as well suggests that there could be further downside. So wait for that end of day close back below 97.37. Otherwise, a range between current levels and the 50-day moving average at 99.54 is expected. Onto the US markets, and a dip below the 17,500 support. 17,484 was the low in April, so below that for yesterday's close. But we do have the last March support 17,399, so that has come into play as well. Closed above that, so at the moment still not quite ready to press the sell button. Probably easy to sell into strength up to the 50-day moving average at 17,682 and only reverse that position if we see an end of day close above that. The reason for being a seller on strength is because the RSI is now well below 50 at 40.51, and that gives this market negative momentum, at least initially. On to the S&P, and here we see a hammer candle for Thursday's trade, which is at least encouraging. Dip below that 2033 April floor, the low yesterday 2025. So bear trap at least from below yesterday's, last month's support. Initially we're looking for 2059, the 50-day moving average, as the upside on any dead cat bounce, but really only an end of day close back above that would suggest that this market's out of the woods as far as the pullback from last month's highs over 2100. Once again, the RSI below 50 at 42, which does give a negative slant on this, and the risk is that while we're below the 50-day average, we could at least test the 2011 200-day line shown there in black. For the Nasdaq, remaining, just about remaining within that 4,300, 4,420 zone. The low yesterday temporarily 4,284, but we closed back above 4,300. Didn't make a lower low either. 4,282 was the initial May support, so we bounced off this late February uptrend line. And while we're above that, you've got the possibility of a push towards 44.24 at the 50-day moving average. RSI at 41, which is a negative here. So it'll be interesting to see how the week ends as far as the RSI winning or the support levels of this week winning. For the currencies, starting off with pound dollar, here we've got further progress here after the rebound off the 50-day moving average of 143.58 at the turn of the week. Initial target here back to 147.70, which was the initial May high. That ties in roughly with the 200-day moving average at 147.94. But while we remain above the 10-day average of 144.77, the big prize would be a $1.50 plus target over the next 2 to 4 weeks. Euro dollar still on the back foot. Here we've seen really it's back towards the floor of this rising trend channel from November. It's 111.80, so just the low yesterday, 111. 80 on the button. So that is where we expect the market to find support for the end of the week. Below 111.80 risks the 200-day moving average at 111.01. Otherwise, a slight rebound back towards the 50-day moving average level, 113.13. Looks to be on the cards. RSI at 38, which is weak but not oversold. So there is probably more of scope for downside rather than upside, at least initially. The dollar yen, probably the market that's behaved itself the best as far as the technicals have been concerned in recent days. We had the break back above the 10-day moving average, a bull flag there, and then up to the 50-day average in the top of this trend channel from January. 110.20 was the notional target. Looks like we could head up to towards the 112 area, 111.75. 111.80 was where we were for the end of April, so it looks like that could be the next level for this market while there's no end of day close, back below 109.25, which is where the 10-day moving average is now. Finishing off with gold, and a slightly better picture here with the metal holding above this uptrend line from February, and also the 50-day moving average at 12.49. And while there's no end of day close back below the 50-day line, we're still very much in play as far as heading back towards the $1,300 area. The break of the RSI uptrend line so far has not done too much damage. That picture obviously might change for the end of the week. That's it for me. More updates at the same time on Monday.